Joining us to discuss today the auto business, former Ford CEO and CNBC contributor Mark Fields. Mark, it's great to have you back. You know, I think it's interesting. For a long time, we've talked about the urgency to get EVs affordable, especially vis-a-vis Tesla. But anyone who's gone to price one of any brand lately, I think, is facing a bit of a sticker shock. And I know you're watching that.
Yeah, I mean, overall, the industry has a bit of an issue right now in that the middle class consumer has essentially been kind of shut out of the market, just given how the automakers, since the pandemic and the supply chain issue, have biased their production to the high end models. The average payment for monthly payment for a consumer right now for a new car is over $750. So if you think about that, that's about double what it was just in 2019. And when you lay on top of that the fact that the average electric vehicle is about 25% higher than an ICE vehicle, that's an issue because there's not many people that can afford, $60,000, $70,000 vehicles as we transition to EVs.
So is this why when we look at some long-term adoption forecasts, the chart kind of goes up and then flattens out before it starts to reaccelerate? Are we in that period now where it's really only something that the high end can afford?
Well, right now, until some new models come on board, for example, General Motors is going to be introducing some new models at the end of this year that are supposedly in the $30,000 to $40,000 price range. That's really square, right smack in the middle of where mass adoption can take place. But that being said, it's kind of interesting when you look at the intent of consumers to consider an EV. It's actually literally off the charts versus where it was a couple of years ago. But then reality is going to strike when they see what the costs are. I think you're going to start seeing, some of these high projections from some of the automakers. They're going to have to adjust those or adjust their pricing to reach their volume goals.
So, Mark, as all of this is happening, we just touched on it earlier in the show, but the Biden administration basically establishing standards for a U.S. network of EV chargers. Tesla's going to be part of this process as well, opening up some of its existing network. But then you also have the likes of Hertz and BP saying that they're going to build out a national network as well to accelerate adoption. You helped to lay the groundwork for some of these partnerships with Tesla and other EVs where Hertz is concerned when you were running things there on an interim basis. I just wonder how quickly you think all of this infrastructure can, in reality, be built out, what it's going to mean in terms of pricing of that infrastructure, and whether the electrical grid, which is already strained in so many parts of the country, is going to be able to handle the demand.
Well, I think overall, when you see the guidelines that came out from the Biden administration today, it's a real positive for the transition to EVs. I mean, it gives the incentives for all the charging companies to build out their infrastructure. Clearly, I think one of the most positive things in that is it requires all EVs to charge on what they call the CCS standard. So you're going to have one charging adapter for the entire industry, which I think is a good thing. To your question, I think everybody's going to be working really hard, obviously, to get the input materials to build these charging stations. And I think that's going to be not so much of a challenge given the inputs there around steel, et cetera. I think the bigger issue, as you point out, is what is going to be the strain on the electrical grid. Because as you put all these charging stations in, depending upon where you are in the country, the electrical grid is either in great shape or in not so great shape. So I think that's the next step, and particularly a lot of these utilities have to look at their loads, see what they can accommodate to meet these volume forecasts that are coming from the automakers.
On the charging stations, Mark, right now, if you're going to stop, it takes, 30 minutes to get a full charge? I'm not sure exactly how long it is. I just wonder, in a world where we're accustomed to getting gas in 5 minutes, are we all going to adjust, or is it going to get a lot quicker? It does open up a real opportunity for concessions at those stations, it would seem to me.
Yeah, you're going to have to spend some time. There's different levels of charger. There's a level charger 2, which, you can charge your vehicle to about 80% in about an hour or so. Then there's the superchargers, which a lot of the Tesla infrastructure is superchargers, where literally you can get 80% charge in about 20 minutes or so. There is a physical limit given the existing battery technology on how fast you can charge. There is something called solid-state battery technology coming down the pike, which should cut that even in half, if not more. But you're not going to see that till the beginning of the next decade. So I think to your point, David, I mean, consumers are going to look at and say, I'm interested in EVs, but then it comes down to other issues around convenience. Do I want to, wait 20, 25 minutes, 30 minutes when I have to charge my vehicle? So I think you're going to see, good uptake in the EV market, but maybe not as fast as everybody expects as consumers look at these other inconvenience factors. But those will be solved over time.
And of course, you need production to be going off without a hitch at the automakers, too, which brings me to Ford, which you used to run. I mean, they've halted production and shipments of that flagship F-150 Lightning pickup, possible battery issues there. We saw those rough fourth quarter results earlier in the month as well with that net loss for 2022. Excuse me. Cutting costs, particularly in Europe, those headlines. Just want to get your thoughts on what's going on at Ford specifically as you do see these more legacy automakers make these big shifts towards EV.
Yeah, I think every automaker, and Ford is a good example, they're planning for the future now. And, when you look at some of the redundancies that they've announced in places like Europe, I mean, that's really the reality, that it takes less people to build EVs than to build ICE vehicles. And that has implications for your workforce. So I think you're seeing all the automakers, including Ford, look at how do we get our organization as fit as possible as the industry transitions towards EVs so that we can continue to maintain our margins, continue to invest in the technology that's required, not only the battery technology, but also the connected services that a lot of the automakers, including Ford, are banking on to contribute new revenue sources for them over time.